Today, it will start with a debate on whether the proceeding is constitutional. Then tomorrow, the House impeachment managers and Trump's defense team each will begin up to 16 hours of presentations. The former president is virtually assured of acquittal. It would take a 2/3 majority to get a conviction. In Myanmar, police fired rubber bullets, tear gas and water cannon at demonstrators throughout the country today. Protesters opposed to the military coup were defying a ban on public gatherings. Myanmar's military leader has publicly defended his actions, repeating claims that last November's election was tainted by voter fraud. And Bitcoin kept rising today after soaring over the $48,000 threshold for the first time. Tesla revealed that it had bought $1.5 billion of the world's largest digital currency. The company also said it would accept Bitcoin as a form of payment for its electric vehicles. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
and click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The second impeachment trial of Donald J. Trump will commence. Only the fourth trial of a president or former president in American history. And the first trial for any public official that has been impeached twice.
An historic day down in Washington, D.C. Senate Majority Leader Chuck Schumer there. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your equity market this Tuesday morning, just off all-time highs on the S&P 500. We pulled back just a little bit here. No drama on the S&P, down about 5 points, negative 0.12%. If you get to euro dollar, 121 handle. Euro making a comeback. Dollar just a little bit weaker here. And after the big moves in the Treasury market over the last couple of weeks, yields back in by a couple of basis points to 115. Got to sit on crude just for a moment, Tom. Unchanged today, but the commodity rally that's really started to gain steam in metals, in energy. Yesterday, in the equity market, energy stocks absolutely flying. Crude supportive of it.
And Amrita Sen was outstanding yesterday, reframing out a range up to $80 a barrel. I thought that was a really important discussion. Right now, Kevin Cirilli on Impeachment Watch, our chief Washington correspondent. Kevin, I want to devolve down to one person. We have Shelby of Alabama retiring, Toomey of Pennsylvania retiring, and there's all these other names that are visible. I want to go to the senator from Kansas. Replacing Pat Roberts is the senior senator, Mr. Moran, many years in the House, the Congressional 1st District of Kansas, and now Senator of Kansas. How does Senator Moran adapt to his Republican Party in this impeachment?
The same way that Chairman Ron Johnson of Wisconsin has adapted to the Republican Party. And it's a great point, because I think right now, yesterday when I was talking to sources on the Republican side, what they told me was that right now there is a power vacuum in the Republican Party. From the political perspective, where to look at the Republicans and their comments, especially over the next couple of days during the impeachment trial, it's going to be a very telling sign for the various Republican camps ahead of this new midterm and presidential cycle.
Will the former president be visible in the process? Do you perceive that Donald Trump will be silent, ensconced in Florida, or is he going to be visible through the process?
He'll be releasing through his attorneys as well as through his spokesperson, Jason Miller, there's some statements, I'm told, is that as they have done over the last couple of days. But again, remember, his favorite use of communication is Twitter, and he has not been able to utilize that social media platform. In terms of the process and the timetable, 16 hours each for opening arguments, going to be kickstarted New York time this afternoon. Senate Majority Leader Chuck Schumer has said that it likely will have to take until Sunday or early next week for the trial to be finalized. Again, based on the public comments of Republican senators, it's very unlikely that there will be a conviction in the Senate.
Kevin, this market was unmoved on the day of the rioting, and this market is unmoved today as impeachment proceedings really get underway. For this market, it's far more interested in what might not get done for a couple of days now, because the distraction, the focus is elsewhere. Where do fiscal talks go from here? Where does the stimulus effort go from here, with this the main attraction right now down in D.C.?
So the issue of the stimulus and the $1.9 trillion stimulus, Jonathan, is very removed from the trial in the Senate. But the process of reconciliation, as it's known, in which they will have to juxtapose both of the House and the Senate version of the stimulus bill, typically that actually can take, anytime you're talking about this much money, several months. But President Biden, as well as Treasury Secretary Janet Yellen and their economic team, have really been at the forefront of saying this has to be done very quickly. And as a result of that, it's caused some Republican pushback, but Democrats are all still in line as of now to get this over the finish line. And again, anywhere from 3 to 6 weeks is the timetable that they'd like to see.
Kevin, there's quite a bit of reporting that Joe Biden's right now, his strategy is being colored by his experience back in 2009, when he believes that the package was too small that they put out there to stimulate the economy, that President Obama at the time compromised too much with Republicans, and as a result, that the recovery was sluggish. How much support does that theory have, does that belief have on a bipartisan basis?
100% from the Democrats, and with the exception maybe of Larry Summers. But I would say on the right, it's very divisive. And in fact, I would say about 70%, if I had to put a number on it, for Republicans who are against this. But the reality is the polls are different than the elected officials in office on the Republican side. The stimulus plan, according to the recent polls that have come out, is incredibly popular amongst Republicans and Democrats and the voters that are for this. But the rank and file members, the Americans for Prosperity organizations of the world, are making a political bet that the stimulus is akin to the Tea Party movement that rose after 2008. But other Republicans that I've talked to have said, that's not the case because this is a very different cause of this economic downturn than in 2008. It's a fascinating political bet that a lot of 2024 candidates are going to be making and weighing with their arguments on impeachment.
How does Kevin McCarthy adapt to that?
I was struck, and I think Punchbowl News, the newly launched news site, morning newsletter down here, they've spoken with McCarthy, and they noted this morning in their morning note that he has been really upfront and saying that he feels he can talk to anyone, whether it's former President Trump down at Mar-a-Lago or Congresswoman Liz Cheney. That he's one of those Republicans that's saying he's a member of leadership in the Republican caucus and that he's going to talk to all different factions of his party.
Kevin, thank you. Always good to see you, sir. Kevin's already down in Washington, D.C., our chief Washington correspondent. Just to touch in on the price action this morning, we look a little something like this. Equities down by about 4 points on the S&P. No drama. We pull back from all-time highs, down by about 0.1%. The themes haven't changed.
Yeah.
The themes have not changed. Euro dollar 121, your bond market 115.16. But it's the same old story, Tom. A lot of stimulus is coming through in the next couple of months.
There's a number of ways to go here, John, but I'm going to go to the blunt instrument like a Dean Kernett world, which is the VIX just refuses to come in. I'm sorry, the VIX has a volatility regime, rather, that is starkly different than what we've seen over the last number of years, 21.78. At this price point, John, to be charitable, that ought to be a 19, and I think pros would say even less than 19.
If you want to talk about a high-vol asset, a high-vol speculative asset, Tom, let's do that. The last 24 hours has been Bitcoin to the moon. And Tesla giving it some institutional credibility, I think, in a way that a lot of the bulls expected to see.
The speculation that Apple's going to step in and get out front.
Speculation is the right word.
I'll be honest. I'm revisiting the doom and gloom on Bitcoin. I'm reading Raphael Auer's piece from BIS from a year and 6 months ago or whatever it was. Yeah, I got real questions, John, but we're not here to editorialize.
No, look, for me personally, I have huge respect for the tech professionals, the software professionals that know this stuff inside out, the technicals, the mechanics behind it all, Tom, and we're learning as we're going. But the bull thesis, this was part of it.
The bull thesis is lights out.
Let's be clear.
Minor,
this was part of it.
Novigrads, they look like geniuses right now.
Well, I don't know about Minor just yet. I think he had a price target of 400K, Tom.
The trajectory's there. Could be 4th of July.
4th of July. I mean,
all right,
someone might clip this, so I'm not going to push.
I'm placing an order to sell short British pound. Okay, at 137.753. Let me see if we'll be able to execute. Okay, let's wait for a couple of minutes. So if you want to short British pound, there is a time. Right now, time to sell short at 137.753. Okay, also I'm placing an order to sell short again euro at 121.49. 121.049, just right here. Okay, order placed. So if you're looking to sell short euro, another time.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. I'm not going to lie to you. It's a bit of a boring morning. Equity futures down 0.1%. Boring relative to the excitement of people driving stocks to all-time highs, okay? There's the caveat. We come in about 0.1% on the NASDAQ as well, pulling back from all-time highs here. A record that's getting a lot of attention, this one right here. Switch up the board. High yield. I want to talk about high yield spreads, though. This one's for Lisa.
Thank you.
High yield borrowing cost, junk bond borrowing costs, record low. But you have to look at relative to where treasuries are. And treasuries haven't been where they are in the last 12 months ever. So here's the spread. 1 year, almost at the tights of the last year at about 327. The pre-COVID tights just north of 3.1. I think 314, 315 if my memory serves me correct. This is important. I agree. I agree that the average duration of this index has got a little bit longer as well, so that record low is all the more impressive. But relative to treasuries, we're not at record tights. We're at the pre-pandemic tights, almost. Yes, energy's been taken down nicely, but energy's been supported by this. Switch up the board. Crude. Crude rallying really nicely, back to 58 on WTI. In January, we had $50 billion of high-yield supply in the high-yield market, and about a third of that was in the energy segment. That's been supported by this. Crude getting back up to 58.
Short position opened on British pound. So if you opened, well done. Open at, you should open at 137.753.
Thanks. Oh, I have lots to say. We'll go there later.
Okay. Remain first, though.
Yes.
Good morning, Remain.
Good morning, John. Good morning, Lisa. Good morning, Tom. Taking a look at some of the big movers here in the pre-market. Cody, that's actually one of your biggest volume movers. Of course, big maker of perfumes and all types of beauty products. Reporting earnings. Earnings beat pretty much across the board, but pretty much investors weren't quite getting exactly what they expected out of the company. If you're looking for some action, though, in the market, a lot of it right now is actually going on in the cannabis sector. You had two big catalysts here. You had Tilray basically coming out saying they had struck this deal to distribute its medical cannabis products in the UK. And then Canopy Growth came out with its earnings report that were actually way better than what the street was looking for. So you're seeing a lot of those names rise. Canopy Growth attributing a lot of its growth right now to these Martha Stewart-themed products, including a big...
Also, position open on Euro at 121.049. Just right here. Okay.
How he's been evangelizing this whole idea of putting Bitcoin onto corporate balance sheets. Of course, he had that big meeting with a bunch of firms last week, 1,400 firms, according to him. He said that we're on that call. Obviously, we know Tesla, Elon Musk, listened to Michael Saylor, calling him a genius for putting his balance sheet aligned with Bitcoin, at least to some extent or another. Flip up the board, a lot of activity also going on in the video game space. Big deal here. Electronic Arts buying Glue Mobile. This is the mobile gaming platform, probably best known for Deer Hunter and, of course, the Kim Kardashian Hollywood game, very popular there on everyone's cell phones. They're combining that up, and, of course, that's leading to a lot of speculation that there's going to be a lot of other deals out there. Zynga, another big mobile game company, higher here on the back of that speculation.
Romain, thanks so much. Greatly appreciate that this morning. Futures -3 on Bitcoin. Down it went, 48,000 down to a 45 level. We've rebounded nicely in the last hour, 46,300 on what has been a volatile stock this morning. This was a hugely popular interview a number of weeks ago. Mark McCormick revisits with TD Bank, their global head of FX strategy, because Mark McCormick has absolutely nailed dollar stability and indeed dollar strength. We just simply haven't seen that, and now we see it now way away from the weak dollar consensus. Mark, you reaffirm dollar strength. Is it a noodling dollar strength, or can it be big figure moves?
Yeah, it's a bit of a nuanced dollar strength. It depends on which currency you're looking at and how you think about global reflation. It's definitely dollar strength against the euro. Again, another push towards 120, below 120. But it also depends on some of these other European currencies. The way that I think the markets need to internalize this is part of a pivot from one regime to the other. And through that pivot and that transition creates more volatility. But on the other side of it, they're trying to figure out, is this dollar exceptionalism or is this just a squeeze in positioning? So right now, markets aren't really sure whether it's the positioning side or whether it's partly a U.S. exceptionalism story. But I'd say what this creates is a much more decorrelated dollar structure where you can look at relative value across countries. You can look at relative value within blocks. And you don't have to have a big dollar theme. And I think that's a big part of it, where it's the dollar outperforms European currencies, but you could still see a layer where commodity currencies perform well, and you could still think about carry trades on a reflation basis.
Well, I mean, the carry trades goes to the interest rate call. Are these dynamics interest rate based? Are they relative growth based? Or is it flows?
Well, it's definitely relative growth. And part of it is that you want to think about European currencies as funders. So the euro is kind of morphing itself into a key funding currency, largely because if you look at the relative equity flows, the Europeans are not attracting any equity flows, which I think goes back to the growth story that we talked about last month. The U.S. growth story is the thing that's surprising the most, and it's catching most people off guard. They're not sure whether this is positive or negative for emerging markets, largely because if you see U.S. rates rise off the U.S. growth story, then that that disentangles the carry story a little bit. But it seems like we're moving into a bit of a sweet spot where, again, the euro becomes a funder. You look at LATAM currencies that offer pretty good carry. And you think about the prospects in the second half of the year where emerging markets can start to get inoculated and vaccinated in 2022. And you start to see the synchronization story start to work a little bit better. Which is, we still have some transition to get there, but the big part of this is the dollars leading the growth story right now.
Okay, Mark, you're bringing up some really, really important questions. If the euro becomes the funding currency again, how does it correlate with risk appetite globally?
Yeah, it's a good question because the euro acts as a safe haven and it also acts as a pro-cyclical currency to some degree. I think what you want to think about is even though the global central bank is still expanding, the ECB's balance sheet is expanding faster than the Fed's. And again, if you look at relative monthly flows of equities into the Eurozone versus the US, you're actually seeing the broad balance of payment in Eurozone is deteriorating, which is regardless of the current account surplus, capital flows are leaving the Eurozone. So I think a big part of this is that if you're thinking about, reflation dynamics and the global economy improving in the second half of the year, the euro becomes the mechanism from which you buy from, largely because the ECB is more likely to do more rather than less. And the Fed is likely to be neutral rather than hawkish. So, what you're expecting is a bottoming in real rates in the U.S., potentially higher nominal rates off the back of this fiscal stimulus we're getting in the U.S. And the ECB allows this mechanism to be the anchor point, largely because their balance sheet is becoming, the quasi-driver of risk assets around the world.
Mark, potentially more people are interested in what you have to say now than ever before. I mean, they always have been interested. We always have been interested. But there was a great story on the Bloomberg terminal yesterday talking about how people who have 60-40 bond portfolios, stock and bonds, are taking a look more at currencies because bonds are so boring and they can't get anything, and they're investing more in trading currencies. Are you seeing that some of these bets that you're talking about, reflation and the dynamic between the central bank liquidity, is being more pronounced in currencies than ever before because people are turning to them rather than bonds that have been so manipulated by those central banks?
Yeah, it's a great point. There's definitely a lot of more discussions around macro. Last year, after, during the pandemic, there was not a lot of discussions on relative macro, which country is doing better than the other. So there are a ton of questions related to that concept. Like, one way to think about this is we track this economic dispersion index, which basically tells us how much variance there is across countries in G10 and emerging markets on a year-ahead basis. And that indicator is telling you that FX volatility should be 3 times the level of where it's at now. So I think people are getting interested largely because even if central banks are basically on the sidelines for the next year, year and a half, there's a lot of focus on countries, especially through the vaccination process and especially through the forward-looking nature of COVID. Some countries look better than others. Like, even in Europe, Norway looks like the leader across Europe. So if you're thinking Europe, it's Norway, it's sterling, then it's euro. So even within that block, there are clear trades that are emerging here. So I think even you go back to Bitcoin and as a form of digital currency where people are thinking, what are the alternatives that we can look at? Maybe are not entirely macro, but something we can diversify our portfolio that we used to just use gold for. So I think it's very clear that currencies are becoming quite interesting, and people are looking at it as a function of growth, as a function of equity flows, as a function of fair value, and whether or not they want to be hedged in those equity decisions that they make when they go across different countries.
Mark, just a final question from me on the Bitcoin point that you've just raised. Is it a competitor with just broad-based so-called fiat currencies, or is there a particular currency in mind that you think it's competing against right now just a little bit more?
I think it's competing in the space of gold. It's a diversification of a portfolio. It's definitely something that's much more focused on the speculative community. Obviously, central banks are thinking about it as well because if you look at what's happening in China, the PBOC is driving the movement towards digital currencies, but that's been pulled over from the private sector there. So this is a public-private initiative. But I would say it's in the realm of gold. It's not in the reserve diversification. It's euro, dollar, renminbi, and then Bitcoin. It's going to sit there somewhere on the fringe, but it's definitely something people are thinking about as an active way to think about macro risks. Our macro risk model basically shows Bitcoin. You can explain maybe 9% of it. So it's not something you want to think about broader global macro, but it is starting to come into these conversations where you want to relate it to a bunch of different assets that you cluster into different risk factors. So I would say, yeah.
Great conversation. Mark, love having you on. Please come back soon. Mark McCormick there of TD Bank. Tom, the euro point, I think, is going to be the really interesting one over the next several months. Just how you get your hands around what is going on in Europe right now and what it means for this currency.
Well, yeah, the absolute ambiguity over yen. We didn't get to it, but he's got a Swiss franc Japanese yen pair as his trade of the week. And John, I get the idea of the mystery of the euro, the whole vaccine overlay. I really wonder what yen will be doing, and I can't get a straight answer. I can't get much conviction out of people.
Not much conviction in the FX market at the moment, full stop, Tom. We came into the year just looking for a weaker dollar. That was the huge consensus trade, massive short, sitting on top of it. A challenge to that view quickly emerged in the first few weeks of the year, I think.
Well, yeah, it did. And, McCormick with a call of stability and even stronger dollar. There's a few others out there with that as well. I don't see yet a real strong reaffirmation of weak dollar. Maybe that waits for the weekend literature.
Weak dollar this morning, Lisa, against the whole of G10.
Yeah, well, this has to do with vaccination schedules. This also has to do with the idea of stimulus. And there's sort of this irony. Deeper deficits doesn't necessarily mean weaker currency. It means stronger recovery, and that's certainly
yeah. But does it also mean
are
they selling out to buy Bitcoin? Seriously?
No, I think that's what Mark McCormick was saying. I'm not going to weigh in on that, but he was saying it's really competing with gold.
You almost did.
He almost just said.
You almost weighed in on it.
Well,
almost.
I mean, that's what he was saying. Almost. He was saying it. I mean, your question was a good one, John.
You almost did too.
Anything else you wanted to shout out? What's your projection?
No. Page 8. Let's talk about page 8 of the outlook for G10 currencies.
Abramowitz outlook.
Just a bit further, bit deeper into the outlook for 2021.
What's page 1?
Tom wants a price target. He wants a time horizon. Wants all of the above.
High yield spreads.
Futures down 4. We're negative a tenth of 1%. Coming up in the next hour, a conversation with Dallas Fed President Robert Kaplan from New York City this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Gupta. It's a trial where the verdict is almost preordained. The unprecedented second impeachment trial of Donald Trump begins today in the Senate. He's almost certain to be acquitted. 67 votes are needed to convict. That would mean 17 Republicans crossing party lines to vote with the 50 Democrats. Proceedings begin today with a vote on whether the impeachment trial itself is constitutional. President Biden is set to ask 56 U.S. attorneys appointed by the Trump administration to resign. That's a standard process for a new administration. 2 of the federal prosecutors will be asked to stay on because they're working on politically sensitive cases. 1 is on an investigation into the president's son, Hunter. And the chief financial officer of Eli Lilly has resigned over allegations of inappropriate personal relationship. The drug maker says an independent investigation found what it called consensual, though inappropriate, communications between Josh Smiley and certain Lilly employees. They say Smiley's conduct was not related to any business matters. The fast-spreading coronavirus variant found in the UK has now found a foothold in Florida. That's prompted concerns about fans who flooded the streets of Tampa after Sunday's Super Bowl. Florida leads the US in confirmed cases of the variant known as B117 with 201 infections. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
I'm placing a stop on profit for euro. Price I'm looking to sell if change direction 121.029. Okay.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
For those of you who sold short British pound, you need to place a stop on profit right now. And you need to place stop on profit at 137.737. Okay, good. You're not losing money. Yes, guys. Well done.
To the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
I originally thought Bitcoin would end the year at 50 or 60,000. Things are happening so much faster than I had predicted, right? The corporate adoption rate, the institutional adoption rate, is accelerating beyond certainly what I had thought about. So now I think Bitcoin could end the year at $100,000.
I think everything right now in this market is happening quicker than many people anticipated. That was Mike Novogratz there, Galaxy Digital founder and CEO of Bitcoin from New York City this morning. Good morning, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Let's get you set up for the market day. Just quickly, a brief snapshot of this market. Your equity market is pulling back from all-time highs on the S&P 500, just a little bit, down 0.2% on the S&P 500. Dollar weakness today through all the G10. Euro dollar briefly kissing 121 or 120.99 right now, up about 0.4%. And in the bond market, the bid returns. The bid is back. Yields down a couple of basis points on a 10-year to 115.33. Can we get a snapshot of Bitcoin, Tom, just quickly?
Oh, please.
Rolling over just a little bit, just about positive on the day still. Bitcoin up about 1.5%, 45,000, and let's call it 400-ish after a 48K print a little bit earlier.
At Bloomberg Intelligence, Michael McClone has done the best work on Bitcoin. He's looked at the dynamics of it. He's looked at the modern market features of it. He's clearly been way out front in the vector moving higher from the lower left to the upper right, as a skeptic Dennis Garber would say. Michael McClone joins us this morning with Bloomberg Intelligence. Michael, I want to go back to first principles in a Bloomberg article today on coal in Western China. There are things called miners. From Butch Cassidy. Who are those guys?
It's a global decentralized network following any place they can find cheap energy. From a strategist standpoint, the bottom line is there's 900 coins that can be mined a day. That's the max. Come 2024, it'll drop to 450. So I analyze it as the miners don't matter. It matters to them, but from a strategist predicting price, this is a set supply schedule. It's declining in terms of percentage. The only thing that matters is demand. The key thing is it's only 900 a day. Come to 2024, drops to 450.
Page 1 of every economics textbook, including the ones Janet Yellen studied, is about scarcity. It is a manufactured, the critics would say, contrived scarcity. That always means nefarious elements come in to force the scarcity away. Who are those nefarious elements that could take the scarcity built into the price increase?
Well, there's 8,000 wannabe cryptocurrency Bitcoins out there. There's 8,000 altcoins. So they've tried. There's been many forks. Everyone has worked, but they have got nowhere near the robustness and adoption that Bitcoin has. So it's been through many deaths, and yet it keeps surviving. So that's the key thing about it. It's been killed many times. It keeps coming back. It's gained that global robustness. It's the go-to reserve now digital asset.
I will say, Tom, I just have this image of Butch Cassidy behind a computer plugging in algorithms in Venezuela.
He used them in Bolivia.
And it's really quite an image. I will say, Mike, there is also a question about just how much institutional adoption there is. This was raised, of course, by Tesla yesterday, coming out and saying that they will soon accept Bitcoin as a form of payment. Can you give us a sense of truly how widespread this idea is in major corporations, whether you actually expect to hear some announcements in the near future from other major companies about doing the same?
Well, initially it was a wave. Now it's a tsunami, and that's just getting started. Remember, we're talking about a U.S. corporation based in the reserve currency, the dollar. Just think of the rest of the world that doesn't have that reserve currency. They have maybe much greater incentive to allocate some of their treasuries to Bitcoin. So to me, this is just part of what's happening. It's being adopted on a global scale, and it's part of the reason I think, remember, we went to 30,000, that held support. I think this reason 40,000 is going to hold support now. It's just going to continue. Something has to go wrong, which I knock myself around every day for. I don't know what it is right now, but it's in that unique phase where sometimes the technicals don't matter as much as what's the next support, should it hold, and just focus on your next resistance, which we all kind of know is around 50,000. It's a
Mike,
round number.
The more institutional buying we get, do you think it makes it more complex, more difficult for the government to step in and do something?
Oh, yes, they're going to continue to regulate. Remember, we just had Ethereum futures launch yesterday. We have Bitcoin futures. So Bitcoin's under the purview of a government. When you fill out your tax form.
But that's not government. That's the establishment of a market. John's talking about government regulation of a non-financial, non-coin. When does that happen?
Well, it might happen to something like it's happened to gold. But the key thing about Bitcoin is no one's project, no one's liability. Like Ripple XRP was someone's project and liability, and the government's cracked down on them. Here's the key thing about that. The government, the New York DA cracked down on Tether. Tether's the #1 stable coin. That was in April 2019. The market cap then was about $3 billion. So they've been under that purview since 2019. Now the market cap's around $29 billion. So do you think they've done anything illegal since? That's pure organic demand. What I see is the world wants a digital currencies and a digital dollar, and it's getting it, and the government's regulations getting in there.
My final question, how close do you think we are to a very well-known American company that is not run by Elon Musk, doing exactly what Elon Musk announced yesterday?
It's inevitable. I don't see what's going to stop it.
Wow. Mike McGlone, great to catch up, sir. Thank you. Joining us from Bloomberg Intelligence, Tom Keene. It's inevitable.
I'm trying to be real careful, John. Excuse me. On radio and TV, that can be difficult. It's open to huge debate, and what I take great pride in, folks, is we've really had an eclectic discussion here. Lots of people, John, against us. Lots of people for it at 45,423. Clearly the upper hand right now about those lifting Bitcoin to prosperity.
You know, the Bitcoin community, Tom, it's very diverse. I will say this. There are some really, really intelligent people, and then it's just nasty. You get this real sort of nasty element to it. If you say anything against Bitcoin, people just fill your inbox with some really nasty stuff, which I don't really understand. What is it about that element of it, that almost religious aspect to it, that if you push back a little bit, it just creates this anger in people?
You're going to get that in anything like this. It involves power and money. I mean, it's like gold or silver. I mean, William Jennings Bryan and the cross of gold. Same emotion.
Also, though, John, Bitcoin grew out of a feeling that there was a goal to decentralize currency away from governments. There was sort of an independent streak that has given voice to a lot of individuals.
Yeah, but to John's question, when do they step in? John's question was the number one question. I hate to say that, Lisa, it's killing me. When does the government step in?
Well, I think, but honestly, it makes it much more difficult for them to step in when you have the likes of, say, Apple, if the RBC analyst is correct, that they're going to take their Apple wallet and make it a cryptocurrency exchange.
Well, I think that undermines the anti-establishment argument in all of this. If you get a large US multinational company come out and do this to diversify their cash reserves, Lisa, that's not about anti-establishment. That's not their role, I would imagine. This is not Elon Musk. We're talking about pretty. I'm going to use the word normal. I'll use the word normal.
Go ahead.
Pretty normal CEOs. If they start doing this, Lisa, that's a different argument. That's not an anti-establishment move.
Totally. And it raises a question of who the core user will be. But to raise another issue that you were talking about earlier in the break, we wouldn't even be having this conversation if there wasn't such a huge manipulation and printing of money and this idea of a shortage of assets. Where are you going to put your money anyway? Why not into some store that isn't as cumbersome to hold as gold?
John, what's the Chancellor of the Exchequer going to do? I mean, if we look at London as the center of world commerce, if they've got all sorts of geographic and transnational relationships, maybe much more than New York, how does London respond to this? How does the city respond?
I don't know.
Position closed on British pound. So all of you guys, if you followed my trades and placed an order just about 15 minutes ago, 20 minutes ago, well done. You made a profit. We closed at 137.737.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Right now, people are just trading big round numbers.
What we have, though, is a very big cushion that's been building in excess savings.
We're in danger of those markets overheating.
I think that next fiscal bill is going to be right around the corner.
A lot of the U.S. stimulus actually isn't stimulus at all. It's an antidepressant.
You're going to have a more normal recovery with or without the stimulus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene on radio, on television, across this nation. A day of focus on Washington and impeachment, but much more on that for our global Wall Street audience. It is a most interesting cross-asset bull market floating on liquidity. Let's get right to that discussion. Futures -7. But, John, everywhere you look, there's a nuance of interest.
There is, Tom, but I think the broader point for me this morning is just the argument that perhaps we do have an asset shortage in fixed income, and it's showing up in various places, Tom. And I think that's a conversation we've got to have just a little bit more. Away from just the price. I know it makes a headline, record low yields. I know it gets attention, but it's the story behind the price, the mechanic behind the price, Tom, that I think needs a little bit more focus.
Well, you wonder where the demand comes on. I mean, the corporate issuance comes on. I'm thinking about oil demand, the dynamic we saw with Amrita Sen, Brent crude near $61 a barrel. She talks about up to 80, and the same dynamic in fixed income, which is about corporate issuance. John, we are seeing it, but you wonder if it comes in with a vengeance given the news.
Well, the Wall Street Journal had a piece that got a lot of attention in the last 24 hours, Tom, about the commercial paper market in Europe and these yields that were below the depot rate at the ECB. That was the headline. The story was the fact that savings across the United States and Europe are sky high.
Yeah.
Where's that money gone? That money's sitting in money market funds. Where does it go? Well, it goes into the commercial paper market, and commercial paper issuance has plunged, Tom.
Right.
So what's happened to the yield? That's lower as well. And why is all of this happening broadly in fixed income? The balance sheets are getting bigger and bigger and bigger at the time when savings are getting higher and higher and higher. There's a real issue here, Tom, a real argument between supply and demand as to why the yields are where they are. What I'm trying to understand is what that picture, that demand-supply dynamic looks like. Not now, but when the economy reopens, people re-engage with that economy. What happens to those money market funds? What happens to those savings?
In the heart of the matter, Lisa Abramowitz, is just real simple. What portion of cash is cash forever, or is cash that can go to equity markets? And the answer is we don't know.
Not just equity markets, cash to buy a plane flight somewhere and actually go on vacation. I mean, the idea here that so many people have parked money that they cannot spend in the service economy. I do want to raise an issue, though. John's raising a really important point. And there's another question. How do you measure risk in this type of environment? When you have this type of shortage of assets that's artificially imposed on a market because of the central bank activity, it's not like companies are not selling debt to meet the demand. There is reverse inquiry right now in the high yield debt market. We were just talking about the all-in yields, and there is controversy over how much this matters, being below 4% in the U.S. for the first time ever. And I'm looking right now at high yield bonds outstanding in the U.S., $1.6 trillion. That's up from a low of $1 trillion back at the nadir of the crisis.
You've got to explain this for people that don't follow that market. This is people calling up companies and saying, will you issue some debt, please?
Please, because we need to buy it.
That's where we're at.
That's where we're
Tom, that's where we're at in the credit market right now in the United States.
I am sorry, but it harkens back so much to 05 and 06, where institutions were begging for 10 basis points as well. I mean, I'm sorry. Some of the parallels here are really quite extraordinary. Let's do this. With a data check, -7, Dow futures -68. The VIX really doesn't give us much information, 21.73. John, give me one data point.
Bond market in Italy, last 24 hours, absolutely plunging that yield, Tom, off the back of Draghi's
lower yield.
Around 50 basis points. Not sure where we are today on the screen, but 50 basis points yesterday.
Lisa, your data point, go.
Well, I was looking at junk bond yields, but really one of the most key data points is the gap between the key yield curves in the U.S. and Germany. And basically that gap is the widest since 2011 because you've got inflation expectations surging in the U.S. and not so much in Europe, Tom.
Brilliant. I see that in five-year.
Position closed on euro. Well done, guys. If you followed my trades, so you closed position at this level. Okay, that's it. Well done.
So I don't think that the U.S. dollar is about to surge because you've got a lot of stimulus coming already in the U.S. market and coming to the U.S. market. So this is very unlikely to be a very strong dollar environment. I think the way to read this is that the dollar had been very strong for years. That cycle has broken. There's a lot of stimulus coming forward, but the U.S. recovery and inflation expectations are rising. And so, maybe that dollar environment now starts to stabilize rather than continues to weaken considerably against, currencies like the euro.
So you don't buy the 2017 global synchronized growth weak dollar happy talk, Brian?
Well, I suspect you get there at some point. The challenge is that, the European economy looks challenged. Emerging markets are, for at least in emerging Asia and China, you're seeing improvements in economic activity. The U.S. economy looks like it's gathering some momentum. And so you start to think about some forms of synchronization as we move through this year. But currently, the European markets look challenged.
So if you're buying the U.S., if you don't believe in a weakening dollar significantly in the near term, where do you look? What's the least overpriced corner right now?
Yeah, I don't think that we should say that we're not buying outside the United States. I think the emerging markets look particularly attractive. Those economies are recovering, and those valuations look more attractive. In the United States, the reality is, valuations are not going to be a great timing tool here. So the reality is this is a cyclical recovery. That's the type of reversion to the mean you would expect to see. And so parts of the market that hadn't been loved are starting to perform well. Ultimately, you want to favor structural growth globally, but in the near term, it's your cyclicals and things that do better in a reopening economy as we progress towards that.
Well, Brian, John gets to the heart of the matter, which is the theme of a synchronized happy talk. I love that, John. It really captures sort of the, we are the world feeling that we got a while back. If that's the case, Brian, we have to make choices. Is one of our choices international investment?
It is, and you know, these cycles tend to move over multiple years. So the United States was a large outperformer in the decade after the global financial crisis. That created valuation opportunities outside of the United States. It requires a catalyst. You're seeing that catalyst in the emerging markets with improving growth and policy in the United States that's very accommodative. Waiting on it for Europe, the reality of Europe is the challenges of the economic condition right now. So my view with regards to Europe is less about cyclical exposure to those parts of the market and more of the structural growth stories of Europe and those that are going to benefit from improving economic activity in the emerging markets.
The decision of how you diversify, though, Brian, geographically, I think is a lot more complex than people suggested it was 6 months ago. We came into 21, they were talking about global synchronized growth. What you do is simple. You leverage yourself to Europe, to EM, you short the dollar. It's not that simple because these economies are opening up in different stages at different times, from China to the United States to Europe as well. I don't think we can just make that old decision that we used to make. Global economy up, okay, buy EM, buy Europe, sell the dollar. Isn't it more complex than that now?
It is more complex because the dollar's had a decent move and the U.S. economy seems to be, you know, rates are higher compared to other parts of the developed world. The U.S. economy seems to be gathering some momentum. But I think investors should keep it more simple than that and think about the type of businesses that they believe are structurally advantaged for this new world and a world that we'll find ourselves in over the next number of years. Yeah, there's a cyclical recovery to play here, but structurally advantaged companies exist all around the world, and they're going to be headquartered in Europe, in the States, and in the emerging markets. So I would say long-term focus on that. If you're trying to play the cyclicality of this, emerging markets are recovering first, particularly specifically in Asia and the emerging economies, in emerging China. You know, Europe will ultimately get there if the story holds true throughout the world, which is a vaccine rollout, pent-up demand. It's just, you know, you're right, Jonathan, it's that staggering of the timing of it.
How much do you hedge, Brian, in case you're wrong and the growth perspective isn't as strong as people are expecting?
Well, look, I think the way you hedge this is to focus less on the cyclical recovery trade and focus more on what you think will be the structural advantages of the companies. And so, you know, everybody's looking at a recovery trade, which is real simple to say, at least in the United States, steepening yield curve, you know, value-oriented, cyclical, small cap. To me, if you need to be in the equity markets, you need growth in your portfolio. The way to hedge against a stronger economic recovery is to think of structurally advantaged businesses. I mean, look at the companies that have done.
New order placed for Euro, again, short for 121.044. Just right here. We'll place new order and let's see if it will get executed.
Apologise for those technical issues as well. This scheduled segment ended with a little bit of Lisa Doom. Here's a question for you. What's the biggest risk to this market? Everything goes right or everything goes wrong?
That's a good question. I think that if everything goes right and we get inflation, that will be a positive. What happens if things go wrong and we get deflation and suddenly there becomes this deflationary spiral? I think that's a worse outcome.
Oh, there we go. We needed that, John. Bitcoin to the moon.
Teed it up.
We got our obligatory deflationary spiral.
That's why I teed it up. That was it.
Come on. I mean, isn't that the biggest risk?
Hey, the clock is yours. You've got another 45.
No, it's fine.
12.
Let's talk about Bitcoin prices. Wow, you guys, just absolute silence, huh?
No, we're just going to give you a bit more time on this. What's in your cup, Tom? I've spiced things up
I'm
today.
having a morning deflationary spiral
okay.
here.
That's a really strong cocktail, Tom.
Come on, Lisa. Lisa, the gloom of a deflationary spiral. And full disclosure, folks, I grew up with a whole bunch of this tone in my house. I mean, James Sweeney at Credit Suisse, John, was brilliant on this. With the worry about deflation in continental Europe 3 or 4 years ago, he said, come on, it's not going to happen. Guess what, John? It didn't happen.
It didn't happen.
Because politics fixed it.
I'm not saying it's going to happen. I'm just saying that's a worse outcome than potentially inflation and that they get what they want. You were asking worst case scenario. I could go there.
Okay. Enjoyed that. More to come.
Did you?
Looking forward to that. Julie Norman weighs in, University College London political science professor.
Deflationary spiral. They play Jethro Tull like nobody.
Did they? Is that the 1950s, Tom?
You know, that was a little later than that.
A little later than that, okay.
Boulder, Colorado.
From New York City.
There was a fog, a mist.
With futures negative, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. There's never been a day like this in the Senate. Donald Trump faces an unprecedented second impeachment trial beginning today. It will start with a debate on whether the proceeding is constitutional. Then tomorrow, the House impeachment managers and Trump's defense team each will begin up to 16 hours of presentations. The former president is virtually assured of acquittal. It would take a two-thirds majority to get a conviction. The chief financial officer of Eli Lilly has resigned over allegations of inappropriate personal relationship. The drug maker says an independent investigation found what it called consensual, though inappropriate, communications between Josh Smiley and certain Lilly employees. Lilly says Smiley's conduct was not related to any business matters. In Myanmar, police fired rubber bullets, tear gas and water cannon at demonstrators throughout the country today. Protesters opposed to the military coup were defying a ban on public gatherings. Myanmar's military leader has publicly defended his actions, repeating claims that last November's election.
We opened new position on euro. Let me all close previous profit, so you guys will see where we open this position. Okay. Position, short position, so you still have time. If you want to see it moved up, you still have time to sell short euro. Okay, position opened at 121.044.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Do you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm pleased that Leader Schumer and I were able to reach an agreement on a fair process and estimated timeline for the upcoming Senate trial. It preserves due process and the rights of both sides. It will give senators as jurors ample time to review the case and the arguments that each side will present.
Senator Mitch McConnell there, the minority leader on impeachment proceedings in Washington, D.C. From New York City this morning, good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Your price action shaping up as follows, about 1 hour and 12 minutes away from the opening bell this Tuesday morning. An equity market that pulls back from all-time highs on the S&P 500. Just a little bit here. Keep saying it through the morning. No drama. Down 0.2 of 1%. 3,900, Tom. A 3,900 handle on the S&P 500, February 9th. It has happened quickly, really, really quickly. The FX market, euro dollar with a 121 handle. It's a weaker dollar story through G10 this morning. Euro firmer by 0.4%, and yields back in a little bit. Just undoing some of the moves we saw this time yesterday. Yields lower, coming in 2 basis points to about 115. And then the commodity market had this nice lift in the commodity complex through the last couple of days, the last several weeks, really. Today, just a little bit softer, down 1/3 of 1%, Tom, on crude, about $58 a barrel.
John, a quick take here. As you mentioned yesterday, the yield, the big negative yields come in Europe as well. I look at the Swiss 20, you look at the German 10, and the answer is they're speaking.
And the German 2-year, just focus on the front end for a minute. We talked earlier on the program, Tom, about a shortage of assets. In Germany, that's been a problem for a while now. For anyone who's familiar with the way the overnight...
You need to place stop on profit for euro. 121.024. The 121.024.4, yeah? Okay, 2 pips down.
These themes, Tom, keeps going back to this idea that because of the central bank intervention in certain places, we have an asset shortage.
Well, the asset shortage may be there, and we'll see that in the coming days on the tape and in the markets. This is an important interview. Julie Norman is at the University of College in London. She is a political science professor, but is truly one of the world's experts on political activism and social movement. A different take on what we will witness in Washington today. Julie Norman, if you look at the Republicans, the grand old party, the path from Lincoln to where they are right now, there seem to be partitions, and one of them is militia, and somewhat the violence we saw January 6th as well. Tell us about the social movement that defines a more assertive, a more aggressive Republican Party.
Well, Tom, I think there are different movements going on right now in the Republican Party, and that's pretty clear, and across the left as well. I mean, part of what we're seeing in the Republican Party is people who have very legitimate grievances, who saw Trump as somewhat of a channel for that and are just kind of getting into more of this populist way of thinking. But I think that's alongside much more long-standing groups like some of the far-right extremist groups that we saw at the Capitol. Those groups have been around for a long time. They will continue to be around in the future. They really took advantage of that historical moment and have been pretty savvy about recruiting some other individuals into their ranks these days.
What can be the institutional response to the reality of guns, weapons, rifles, whatever, in a legislative branch, whether Republican or Democrat? What is the expected or best outcome for the institution?
Well, Tom, I think our institutions, and this is true for Democrats and Republicans, that most individuals, most lawmakers, and even most American citizens have pretty strong respect for our institutions. They want to see them function well. They don't want to see them becoming places of brawls and violences, even maybe as they were in the past in our history. And so I think it makes sense that certain safeguards are put in place to make sure that happens. With that said, I don't think anyone in Washington wants to see the more militarized state that it's in right now continue forever. Those precautions were put in place, obviously, temporary for a reason following January 6th, but they will be, it will go back to some kind of normal in time, but probably with more security measures than we had in the past.
Julie, in addition to the highly partisan discussions around impeachment, around the stimulus package, there has been an international effort to regain ties with some of the allies of the United States. One interesting note is that President Biden has not yet had a conversation with Xi Jinping, even though he has had a conversation with Vladimir Putin of Russia. What do you make of that?
Well, I think it's a couple of different things, Lisa. First and foremost, that with Biden, we can expect him to really continue some of the policies of the Trump administration in terms of being tough on China. Biden is not looking to really change that relationship that much, even though his approach might be a little bit different. I think with Putin and that phone call, Biden is also trying to show that the U.S. will stand up to Russia as well in a way that was different from the Trump administration. But there were just certain situations of urgency there that required that call and that engagement. The New START treaty, for one, that would have expired this past week if they hadn't had that call and that kind of engagement, as well as trying to put some pressure on Russia around Navalny and the demonstrations around his detention.
Julie, always wonderful to catch up with you. Thanks for being with us. Julie Norman there, University College of London professor. A really important day down in Washington, D.C., Tom. I think we've all almost become desensitized to impeachment proceedings, which is quite remarkable for this country, but that's where we're at.
Maybe you've got to be from abroad to make that observation, John, but I think desensitization, whatever anybody's politics is, really nails it. And we'll have to see. I mean, Leslie Vinjamuri was just lights out with Chatham House 2 hours ago saying we all underestimate what we're going to witness today.
Unlike last time, Tom, some nuances. Do we know where Senator McConnell sits on this? And I know that typically you wouldn't predetermine the outcome, but that was the story.
We closed another position on euro, 121.024. Show you just right here. So you guys, you're doing well today. Yeah, well done.
McConnell stands, or frankly, where any of the Republicans stand. They don't want to answer that question, which is the reason why it's going to be a constitutional issue of whether this is even constitutional to be trying a president in Congress after they have already left office. They want to make it that, and they want to kick out the trial and end it quickly. And 17 Republicans would have to switch sides to really push this forward.
They're the numbers, but I think that's the point. I mean, typically, for any kind of trial, you wouldn't want to predetermine the outcome. You wouldn't want to know what the jury thought before the trial had happened. But that was the story last time around. And I think that's probably the difference this time around. But like I say, I mean, most people in this country, Tom, this used to be a really moving moment. I mean, we've hardly ever seen it in the United States of America, but when it happened, or it started, or the thought of it that it might happen, this used to be a really moving moment, and now it's just...
We're desensitized.
What is it?
I think
Totally.
you nailed it. We're desensitized, and also just getting to the next week. And, I look at the timeline here, it feels like it's like April 15th, or, June 1st, and we're just weeks, literally days into 2021. That's the way the news flow's been.
Absolutely. I want to check in on the price action of this morning just quickly. A little soft. It is a little soft. Equity's down just a little bit. Just a little bit. We're coming in 0.2%, down about
Go to cash.
7 points. Call it -8, Tom. 3,900. Go to cash. This move in the last 3 months has just been...
It's been a dip.
Just unreal. Yeah, that's a dip you want to buy, Tom. A 20% move higher. From New York, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York City, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. Let's get a quick snapshot of the price action this morning. Futures coming in by about 0.1%. Record high in the S&P 500 coming into Tuesday. 6-day winning streak. We pulled back just a little bit, taking some weight off the NASDAQ, off by a little more than 0.1%. Switch up the board into the bond market, 2s, 10s, 30s. Shape of the curve over the last couple of weeks. Started to get a bit steeper. Yields starting to get a little bit higher. Front end, there's an elephant sitting at the front end. It's called the Federal Reserve. It's going nowhere. At the long end, that's where the flexibility is at the moment. 119.81. That is your new high post-pandemic in the Treasury market. We had that print in yesterday's session. Right now, 115.16. We come in about 2 basis points. So a slightly flatter yield curve on the day. Let's finish on this. Foreign exchange, euro dollar. It's like yesterday, a 180. Yesterday in reverse. Euro dollar. Lower, a break of 120 yesterday, just for a little bit. Now a break of 121, and we sit at 120.98. Dollar weaker through G10. Euro dollar, Tom, up by about 0.4% on a session.
Very good, John. Thank you so much. We welcome all of you on radio and television. An important conversation. Michael McKee is always with the smart conversations on economics. And John, Michael, time flies 5 years in for the gentleman from Dallas.
Yes, who was the gentleman from Boston and New York before that, and we've known him for a very long time. And he is a symbol that life goes on, Tom.
Yeah.
Robert Kaplan is the president of the Dallas Fed. He is also a big Kansas City Chiefs fan, and we thank you for getting up and continuing on, even though that was a rough one.
Well, there's always next year. We'll be back.
Well, there's a debate underway about what kind of inflation dangers are out there from additional government spending. And if inflation does break out, you heard John call you the elephant in the room, you got to deal with it. So what is your estimation? If we get the kind of additional stimulus they're talking about from Washington, what kind of inflation danger does that present?
There's no question that if we're able to get people broadly vaccinated, if we're able to defeat the variants of the virus, and we have a reopening as we go through this year, that along with fiscal support is going to mean that we have strong GDP growth. We're gonna make big improvements on unemployment, and it wouldn't be surprising to see the cyclical elements of inflation build. And I think that you're going to have some supply outages. We're already seeing evidence of it. Semiconductors, metals, wood products. You may see a little bit of even in oil markets, but I don't think those are going to be persistent. I don't think those are going to be long term. But I think there's no question the cyclical forces will build, and over time, the question for me is how strong are the accelerating forces of technology and technology-enabled disruption, which have been muting inflationary pressures for some time. How do those two cyclical and structural forces play out over time? That's what I'm going to be watching for. The temporary jump in inflation or rise won't surprise me. The question for me will be how persistent is it? And for me, I think the jury's out on that right now.
Well, they're talking about a package that would be 3 times the size of what the CBO projects the output gap to be. Is that too much?
So I'm going to won't surprise you. I'm going to deliberately stay away from that topic. Right now at the Dallas Fed, before any new package is enacted, our forecast for GDP growth this year is approximately 5%. It's going to be, again, loaded toward the latter parts of the year, and it assumes that we're able to vaccinate the population broadly and defeat these variants and get more mobility and engagement. I think what I'm hearing in my district is what we need first and foremost, which is being discussed, as you know, in these package debates. We need more money to help achieve these vaccinations. That's the key right now. And it's going to take mobile units. It's going to take more personnel. But if you can get people broadly vaccinated and get more mobility engagement, that's what will open the small businesses and get a lot of these people that are out of work back to work, and more money to reopen schools in person. Schools I'm talking to need to be retrofitted, and we've got a historically high level of women who've left the workforce, working mothers, and we need schools to be reopened, and some investment also in childcare to get those women back into the workforce. That's critical. So those are some of the priorities I hear about. Obviously, extended unemployment benefits to bridge until we're able to get people back to work. That's another priority I'm hearing. But those are some of the things I'd mention, and I'll stay away from the debate in Washington.
We've got $3 trillion authorized so far for COVID relief, and another $2 trillion is what they're talking about. The argument has been from Federal Reserve officials that that's sustainable because interest rates are so low, and as long as we keep the economy growing faster than the debt, we'll be okay. Are you confident that that can happen, that the economy will grow faster?
We're going to get a strong boost to GDP growth in 2022, which I just talked about, and above trend growth, in 2021, and most likely above trend in 2022. The issue over the horizon is what are we doing to improve sustainable GDP growth? And what do I mean by that? Once we climb out of and recover from the hole we're in and recover from COVID, we're going to get back to some real challenges we had pre-COVID. Slowing workforce growth, aging of the population, and productivity growth has not been sufficient to offset that. And so what would help with that? Find ways to improve labor force growth. Again, I talked about women reentering the workforce, but also early childhood literacy, improving secondary education, skills training, closing the skills gap, more widespread Wi-Fi in the United States. I would love to see more investments in education and some infrastructure items, particularly Wi-Fi, that will help create more sustainable growth. But that'll be the challenge that we're going to be talking about over the horizon: how to improve workforce growth and improve productivity. And so, will we grow faster than debt grows? We're going to have to find ways to improve GDP growth, or otherwise the answer to that, I don't know whether the answer to that will be yes or no otherwise.
I know that you and all of your colleagues basically have said it's too early to talk about when you might taper QE, but I'm wondering how you assess the danger of inflating a bubble in financial markets, which is what a lot of people on Wall Street are talking about now, and the $120 billion you're buying a month to keep markets functioning when markets are functioning just fine. Is there a point at which you think the danger of the markets bubble is bigger than the danger of pulling back just a little bit?
So the way I make that trade-off, while we're in the teeth of this pandemic, and until it's clear we've weathered the pandemic, I think it's appropriate to be aggressive with our tools. However, once it's clear that we've weathered this pandemic, and we're not out of the woods yet by a long shot, but once it's clear we've weathered the pandemic and we put this pandemic and the effects of it in the rearview mirror, and we're making substantial progress toward full employment and price stability, I think we'd be far healthier to be weaning off these extraordinary measures. So that's the issue. And I think as soon as it's clear we've gotten past COVID, which I don't know when that will be, I think we'd be far healthier to be weaning off these extraordinary measures.
Well, speaking of questions about bubbles in the markets, your initial career was as an investment banker, and now we've got this SPAC IPO mania going on. What do you think of that? Does that tell you something about where we are in financial markets or this economic cycle?
So I won't comment on any individual situation because there's a lot of factors that go into any one of them. But I would say broadly, when you're keeping rates at zero and you've committed to keep rates at zero for an extended period, you're buying 80 billion of treasuries and 40 billion of mortgage-backed securities. We should expect that that's going to have a material impact on liquidity, financial assets, and that's why I've said we'd be wise as soon as we're able to wean off these extraordinary measures, because these measures certainly have an impact on financial assets, and we'd be wise at the Fed to acknowledge it and be very sensitive to it. And I'm very concerned and watching. Excess risk taking and excesses and imbalances, particularly in the non-bank financial sector. The issue is, while we're fighting this pandemic, and until it's clear we're out of the woods, I think we've got to be aggressive. So the challenge will be, after it's clear we've weathered it, we've got to move away from these extraordinary measures, in my opinion, and I think we'll be far healthier for it.
I know the Fed doesn't regulate equity trading except for your control over the margin rate, but what do you think of the sort of meme enthusiasm that's been going around? Does that worry you in terms of a potential effect on the economy?
So again, I won't comment on any individual situation. I don't at the moment see systemic risk in these markets, but I do think you're seeing, and I'll speak broadly, not about the situation you asked, but broadly, you're seeing the effects, as you'd expect, of again, 80 billion of treasuries and 40 billion of mortgage-backed securities. I think it's necessary while we're fighting the pandemic, but again, after we get beyond it, I think we need to wean off some of these extraordinary measures. And I'm watching non-bank financial markets very carefully, and what I would call excess risk-taking. What I mean by that, positioning that when volatility is relatively low and credit spreads are tight and liquidity is good, look benign, but in hindsight, when you get a vol spike and credit spreads widen and volatility tends to drop, you find people realize they're over-risked and they've got to de-risk and they've got to do it quickly. We saw some of that in March, by the way, and I'm concerned that we should watch that carefully, because there's always that's always something we need to be aware of, and I am watching that carefully.
Before we let you go, I got to ask you quickly, you're our oil guy. How's the pandemic left the oil patch? And I know that President Biden's energy plans are somewhat controversial in your area. Have you modeled the effect of moving away from fossil fuels and the impact on your district?
Yeah, we have, and most participants in the industry have also modeled it. And so you've got an industry that's far more consolidated, and you've seen a number of failures, bankruptcies, consolidations, deleveragings. And I think that you've also seen an industry that is going to spend a lot more money on sequestration, carbon capture, and reducing their greenhouse gas emissions footprint, and also an industry that is committed now, when they have excess cash flow, to returning more of it to shareholders and less of it to drilling. So because of that, we think that supply and production in the United States will be flat with 2020 this coming year. And even though prices are moving up, people may be surprised that supply does not move up like the way they would have expected to in the past. So the challenge in the United States is to keep a healthy oil and gas business, understanding that a smaller and smaller percentage of energy consumption is going to go to fossil fuels, and much more aggressive energy consumption to wind, solar, other alternatives. And the challenge is going to be to make that transition.
Robert Kaplan, Dallas Fed President, oil patch leader. Thank you very much for joining us this morning here on Bloomberg.
Mike McKee, great work, as always. Tremendous. Thank you, sir. Two important issues at play here, Tom. One is the inflation outlook, a short-term burst of inflation that many people anticipate when we reopen, a burst of inflation that this Fed is willing to look through on the rate side of things. But where the debate will emerge, Tom, a little bit more, is on the asset purchase program.
Well, we see it tomorrow, inflation report tomorrow. Goods inflation right up abrupt and next to service sector inflation, which has come down, down, down. It is a mystery where they'll be 6 months from now.
From New York City this morning, good morning. This is Bloomberg Surveillance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Prior to the pandemic, most traders felt they need to be in the office next to their trading screens, close to their brokers, etc. Whereas I think this last pandemic really taught all of us that actually we can trade from home.
The shifts that are out there, and we say good morning to you on radio and television. Lisa Brownson, Tom Keene, John Farrell in deep preparation for a 9 a.m. launch as he looks at markets. I'm going to say struggling a little bit here after day after day after day of up. Futures -7 Dow Futures negative 60. This is well timed. Barry Ritholtz is a great student of the influences out there. It is a word misused now, but 20 years ago, 30 years ago, it was a very specific and acute word about persuasion. There was a guy at Arizona State, Robert Cialdini, who was wonderful with path-breaking books on what was this strange thing of modern media and persuasion. It almost goes to Marshall McLuhan. Mr. Ritholtz joins us today with his wonderful podcast and also with Ritholtz Wealth Management. Barry, Robert Cialdini, persuasion and Bitcoin. Explain to us right now the persuasion elements, the influence elements of the battle over Bitcoin and the shock of 45,000.
So there are two broad types of influence on people. I think, and if you want to put it in economic terms, it's really the micro and the macro. Cialdini's focus was really one-on-one individual, whether it was sales or corporate relationships or whatever interpersonal relationship, that sort of influence, those sorts of persuasion is where he focused his work on. And for sure, there's a lot of that going on in the crypto space. The broader approach is really the one taken by Bob Shiller of Yale, who focus on narratives and how these storylines can influence not person by person, but entire crowds all at once. And I think what we're seeing with crypto, especially given Elon Musk's most recent announcement, is a combination of both. The story driving the entire crowd, but the people who feel like Elon is speaking directly to them, that's more of the Cialdini persuasion approach.
And what's so interesting here, Barry, is the uproar now, positive or negative, whether you believe in Bitcoin or not and all that, doesn't speak to the institutional structure of Bitcoin. Do you have an understanding of the institutional underpinnings of Bitcoin?
Of how it's produced or how large institutions
how it's produced, how
Sure.
it's the bid and demand, the Marshallian cross of Bitcoin.
Well, you know, a lot of this traces back to the financial crisis, where we saw a monetary but not a fiscal response to try and save the economy. That just poured fuel on the fire to all sorts of concerns about income and wealth inequality, as well as, quote unquote, fiat currency. And it's not a surprise that a lot of people who were deeply, deeply frustrated by how the economy was saved, not why it was saved, but the methodology used, got frustrated with central banks and centrally planned economies, even in ostensibly capitalist countries. And this is sort of a way, this is a libertarian way to step back and say, let's allow the marketplace to determine the value of a currency. Hold aside the fact that the marketplace does that with FX, obviously. But the idea that no one government can control something was really, that's the narrative that drove the early adopters into Bitcoin.
Barry, there's a larger question here, too, which is how much the backdrop has really changed right now as we head to the next economic cycle. I mean, Joe Weisenthal of Bloomberg Markets was talking overnight about how this, for the first time, feels like perhaps we really are getting a change, a fundamental change in the economy with perhaps a higher inflationary kind of tilt. I mean, do you think that that is valid as somebody who invests in index funds, who's somebody who invests more broadly in the markets, that we are entering a new regime where there's a new paradigm ruling?
So first, I have to begin by pointing out that we have seen a decade's worth of longer, 12 years worth of forecasts of inflation and hyperinflation and currency depreciation, and they have been nothing but, and you don't get inflation when you have merely have some fiscal stimulus. So they've been wrong. I was just reading a piece, I don't want to name shame anybody, but from August 2009, warning about here comes inflation, the Fed is doing it, and it really reflects a fundamental misunderstanding of how the economy works. One day we'll have inflation, one day we'll have wage pressure, but to get to that, you need a whole lot of things to happen besides zero interest rates and a few trillion in fiscal stimulus, you need pretty close to full employment. You need pretty close to big ramp up in GDP production, and you start to need a shortage of assets, not a handful of houses in the Hamptons or in Palm Beach, because there's only so many and we're supply constrained. You really need demand far exceeding supply, and we're years away from that. So the short answer is no, I'm not worried about inflation in 2021. We could talk in 22 and 23 and see the state of the world.
We'll get a tweak on that tomorrow as well at 8:30. Barry Ritholtz, thank you so much. Greatly appreciate that this morning. Lisa, I find the cross currents here absolutely fascinating. I can honestly say, you know, we're staggering into the second week of February, and the news flow is such where you want to completely reset 12/31 outlooks for 2021.
Well, we saw a lot of the consensus trades turned on their head in the first month.
Starting with the equity markets.
Starting with the equity markets, where you saw that extra leg higher, but also with the dollar. And that actually was one of the huge consensus trades, this idea that short the dollar was going to weaken versus all other currencies with this reflationary bet. But it's, yes, they're a reflationary bet, and yet the dollar has not weakened. It has strengthened. And this has actually turned a lot of theses on their heads.
Year to date, Dow up 3%, SPX up 4%, NASDAQ 100 up 8.5%. I'll let you annualize that, Lisa.
With Bitcoin.
Bitcoin, I don't have Bitcoin in front of me. The answer's up 1,000,000% as well.
But there is a question, too. I mean, there was one company, for example, that had no profits that would threaten to go bankrupt last year. It's a renewable energy company, and it's up thousands of percent because people are pouring into this bet that this administration will back these companies. You do think about some of these outliers, and you wonder how much they're indicative of perhaps some of that risk-taking that Robert Kaplan was talking about.
Exactly. Robert Kaplan summing it up. Look for that across all of Bloomberg Media today. We thank you for watching and listening on Bloomberg Radio and Bloomberg Television. Just the ferment here is extraordinary. I want to pay particular note to Kevin Cirilli, Sound On tonight, 5 p.m. on Bloomberg Radio, 12 noon, David Weston, a simulcast with Cardin of Maryland. Look forward to that. Stay with us. This is Bloomberg. Good morning.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes to go. We pull back from all-time highs, down 5-6 points on the S&P 500, negative a little more than 1/10%. We begin with the big issue. When it's hot, too hot.
We shouldn't ignore the inflation.
The inflation trade, I think it continues to build up. Inflation moving higher.
The 10-year break-even's about 2.2%.
The stimulus which can come through from the U.S., it gets another leg up.
When that number gets kind of 2.25, 2.5, it does turn into a little bit of a headwind.
As there's more and more stimulus, you increase the inflation expectations.
Fiscal policy in the driver's seat.
It's going to drive real rates up.
We see that in the shape of the yield curve.
Growth will be potentially accelerating.
Triggering a much hotter economy. You could see a big inflation scare.
There will be, a fair amount of tolerance.
We are expecting this sustainability of monetary policy.
If inflation does turn up in a surprising fashion,
that's really the key investment question this year.
There will be very few places to hide in markets.
There could be very few places to hide. Let's bring in the Bloomberg team, Abigail Doolittle and Michael McKee with the price action. Let's get to Abby. Morning, Abigail.
Hi there, John. Well, what a month of February it's been. Risk assets really on fire, maybe answering that question of whether or not it's too hot. If we take a look at the major averages here in the U.S. and some of the peripheral indexes as well, all at record highs. In fact, all of these averages up every day in February. The Dow is up the least, up about 4.7%. But take a look at that small cap Russell 2000, up more than 10% in just a few days, John, hitting record after record. That index in particular is the most stretched relative to its 200-day on record. So again, maybe it is a little bit hot here. That froth that everybody was talking about last year, certainly in spades back in stocks. But it's also in commodities, another branch of risk assets. If we take a look at the Bloomberg Commodity Index over the last week, up about 3%. Industrial metals getting a nice bid, up 4.7%. Crude oil back above $57 per barrel, up 5% over the last week. And this, of course, is another piece of that reflation trade, the idea that you have commodities climbing on the expectation of an economic recovery. As for the actual inflation piece of it, John, one measure at least, if we take a look at the 30-year yield yesterday, briefly backing up above 2%, but now back down at that one point yesterday. We had stocks going toward the lows as yields retreated a little bit. So it's going to be interesting to see whether that key piece, yields, which are, again, down a little bit today, will hold up this reflationary theme that we have.
It is yesterday in reverse going into the opening bout, 28 minutes away. The key topic, reflation. A key question, how the Fed will respond. Dallas Fed President Robert Kaplan speaking to Bloomberg's Michael McKee just a little bit earlier on. Take a listen.
It wouldn't be surprising to see the cyclical elements of inflation build. The temporary jump in inflation or rise won't surprise me. The question for me will be, how persistent is it? And for me, I think the jury's out on that right now.
The jury's out. Let's bring in Mike, shall we? Morning, Mike.
Good morning, John. Well, Abigail told us to take a breath. That never happens in Washington, and there is a big debate about how big the stimulus should be and what impact it will have on inflation. And you heard Rob Kaplan saying there, he's not sure yet. And that's going to be a theme as the year goes on. Take a look at what investors and forecasters are saying about inflation this year. Kaplan's right. The forecast is for a big rise in inflation in the second quarter because inflation fell so much in the second quarter last year. The green line there is the inflation forecast for the first quarter. The yellow line is where we go in the second quarter, according to the forecasters surveyed by Bloomberg. But then it falls back in the third quarter to where the purple line is, just below the market expectation. That's a 5-year break even there. So we're kind of all over the lot on where inflation is going to go. And it's after that that the Fed has to start to worry. Kaplan at least has recent history on his side. The Fed has targeted PCE inflation, which runs 10 to 40 basis points below what the CPI is. And as you can see, it's poked its head above the 2% level into that sort of target range the Fed has now, but it hasn't stayed there. So does the Fed have to react? Do we have an inflation problem coming? This debate is going to continue. We get CPI tomorrow, but it's still too early to have a major effect. We're going to see a tick up in the headline, a tick down in the core. Both come in 1.5%, John.
Mike, on this debate, though, the Fed is pretty much universally on the same page. When it comes to the asset purchase program markets, that's where there's some cracks. That's where there's some differences. How do you expect that to evolve in the coming quarters?
Well, they're going to be watching what happens in the markets, and I heard Robert Kaplan today a little bit more nervous about where financial markets and financial assets are than I have in the past. The big debate, of course, on Wall Street is, do we have bubbles forming? And that's something the Fed's going to have to watch very closely. I asked him about SPACs and IPOs because he was an investment banker, and he said, well, you know, we're watching a lot of activity there. And so at this point, the Fed isn't ready to make a decision, but it's probably going to get folded into the question about when they start to taper. And that'll all depend on the inflation question and the growth question and what we get out of stimulus.
Mike McKee, tremendous interview. Thank you, sir. Counting you down to the opening bell, 25 minutes away. Equity futures rolling over just a little bit, down 8 points. We're off by 0.2%. You okay, Mike? Yeah. He's okay. All right, good. John Hancock's Emily Rowland, weighing in on the Fed's balancing act, writing the following. If inflation surprises to the upside, the question becomes, what's the response to rising rates? The Fed can intervene with curve control, more powerful QE, or continue to let yields rise, likely leading to a risk-off environment. Emily joins us right now for more. Emily, always great to catch up. Thank you. Let's just start with your base case. What is it?
Yeah, so John, I think you could see some transitory factors pushing inflation higher here over the short term. But in our view, inflationary pressure should actually remain fairly contained. There's a huge amount of slack still in the labor market. There's big secular trends around technology, around globalization that we think should keep a lid on inflation over the longer term. And that's one reason that we're comfortable continuing to own bonds here as the ballast of a portfolio. But of course, there's areas of the equity markets that certainly you want to be embracing and having exposure to as we do start to see this reflationary trade taking off in pockets. I think selecting the areas of a portfolio where you want to have offense is really important now, as some parts of the market have really just been flying. You look at small cap equities, and Abigail talked about this in the introduction. In the fourth quarter, they were up 30%. They're up another 16% year to date. I mean, that is just unbelievable to watch. So there's other areas that we think offer a better trade-off in terms of risk and return.
I'm familiar with your thinking, so let's build on a little bit of it, Emily. The theme seems to be balance and how you achieve that balance. So you're keeping that bond market balance, that duration, without much fear about reflation, but in the equity market, anchoring yourself just a little bit to that cyclical upside in the United States. Can you tell me the pockets of the stock market that you're leaning into?
Sure. So it's really right now about owning the U.S. over non-U.S. equities. And what we're seeing is really this multi-speed economic backdrop playing out, where U.S. economic growth is measured by things like PMIs, continues to accelerate, while the rest of the world is sort of moving in the other direction, particularly in Europe, where it does look like there is a risk of a double-dip recession starting to play out. So if you're going to embrace cyclicality, we think the way to do that is in the U.S., and it's by topping off allocations to value, by looking to go down in market cap. In particular, we see mid-cap equities as really the sweet spot as far as adding that element of participation to a portfolio. And we see that the negative interest rate environment overseas is going to be a big challenge for international equities, particularly as they have a big slug in the financial sector. So we think U.S. banks over international is really the way to go here in terms of adding that adding that participation to a portfolio.
How does the dollar call, Emily, for you and the team over at John Hancock line up with what you're talking about in equities?
This is probably the thing that we're watching the most right now, as the dollar is clearly hitting an important inflection point here, having fallen close to its early 2008 levels. And if you remember, the story from the beginning of 2017 into the beginning of 2018 was one of global synchronized growth. And you saw the dollar weakening as a result of that, as other more risk-on currencies caught a bid. And we're kind of at the same intersection now today. If we're right and this multi-speed environment plays out, that should ultimately create a bid for the dollar. But of course, there's some powerful forces right now that are continuing to put downward pressure on the dollar, particularly the prospects for more fiscal stimulus. So I think it's a really tough call right now to make, but the implications across multi-asset investing here are huge as we head into the remainder of 2021.
So go back to that theme of balance in the portfolio, Emily. If that's the risk, how do I want to balance that risk in the portfolio? If I'm thinking about potentially a dollar breaking out, I'm thinking about maybe this rally in commodities breaking down. Do you think the reduction in your cyclical exposure internationally helps you manage that just a little bit?
Exactly. And I think, again, looking to areas of the growth side of the house, even though we want to own some value, that doesn't mean that you want to abandon the growth side of a portfolio. So perhaps if this reflationary trade takes a break, and I certainly think that the dollar continuing to appreciate here would be one element of that story, you want to make sure that you continue to have parts of the portfolio that can do well based on strong fundamentals, not just this riding the cyclical wave. So for us, that means continuing to own quality, particularly in the US, and also internationally, having a tilt towards growth over value in order to kind of contain some of that more economically sensitive exposure. We're just not ready to go all in on that yet.
Emily, always smart, always great to catch up. Emily Rowland there of John Hancock, thank you. In your equity market right now, down 9, off by 0.2%. Said it all morning. Broken record maybe. No drama. Just a little pullback after a 6-day winning streak on the S&P. With the stocks on the move, here's Abby.
John, let's check in on that reflation trade on a real micro level, because it is pulling back just a little bit today. If we start off with the banks, we are going to see that they're a little bit lower, in line with yields coming in just a bit. And then we also have energy, bigger declines there. ExxonMobil, there's also news that they're shutting one refinery in Australia. But take a look at Occidental, also down. This is oil, is down ever so slightly. So again, you were mentioning the mild pullback. There it is to some degree. And then interestingly, John, we don't have investors going to the safety of big tech, because we also have Apple and Microsoft down ever so slightly. So that pause on the day, there it is for big tech as well. It's going to be interesting to see whether this is the story on the day, but it certainly is the one pre-market, that reflation trade and big tech on pause right now.
Just a bit of a pullback, just a little bit of a breakthrough, 3,900 on the S&P 500 going into the opening bell. Coming up on the program, the Biden administration warming up to the prospects of a fast-track stimulus package. That conversation coming up with Barry Knapp of Ironside's Macroeconomics. From New York City this morning, good morning to you all. This is Bloomberg.
I feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong, because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy. economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The president and his entire administration are continuing to engage closely with leaders on Capitol Hill about the need to act quickly on the American Rescue Plan so we can finish the job of getting $2,000 checks out to Americans. I don't think the American people are particularly worried about how the direct relief gets into their hands. And, you know, that if that's the process that it moves forward through, which seems likely at this point, the president would certainly support that.
The Biden administration contemplating a fast-track stimulus package without Republican support. Senator Susan Collins expressing her disappointment, saying the following: "It was a mistake to go immediately to reconciliation less than 24 hours after we had a constructive, cordial meeting of 10 Republican senators at the White House." Joining us from a divided Washington, D.C., Kevin Cirilli. Kevin, it's always divided. What was the last month about?
Well, it was division, and that, quite frankly, is why Democrats, as I've been reporting over the past couple of days, really feel that in order to get a $1.9 trillion stimulus package through in President Biden's first 100 days in office, that they're not going to be able to go about it with Republican support. They feel that that would just only continue to drag out a process that through reconciliation typically takes anywhere from 5 to 8 months when you're talking about this much money. But beyond that, in terms of the timetable for when stimulus will ultimately come to fruition, when I talk to staffers on both sides of the aisle, they tell me within the next 3 to 6 weeks. Senator Susan Collins is an interesting lawmaker right now because she, like her Democratic counterpart, Senator Joe Manchin, are really in the middle of all of these types of negotiations. President Biden risks alienating people like Senator Collins, as well as to a lesser extent, Senator Mitt Romney, in terms of these negotiations, because quite frankly, if he is to, and not just in the stimulus debate, but in the future debates, because if he is to lose support amongst any senator on the left flank of his party, he's going to need people like Senator Susan Collins to get other legislative priorities through. Jonathan?
Kevin, the focus today, as you know, elsewhere. Can you walk me through the timeline for what is about to take place in Washington today?
As soon as I get off air, I'm headed up to Capitol Hill, where later this afternoon, the opening arguments are going to be begin for 16-hour windows for both Republicans and Democrats, respectively, to make their cases. I'm hearing, based upon some reporting, that this ultimately the trial will not come to a conclusion until Sunday or Monday of next week. But I can tell you that both sides of the aisle would like this to be relatively quick. A historic impeachment trial, a second time for now former President Donald Trump. Virtually no chance that he will be convicted, but it's a really good illustration of the power vacuum right now in the Republican Party. I'm going to be paying attention to where different potential 2024 candidates are on this impeachment vote.
Looking forward to the coverage, Kevin. Thank you. Barry Knapp of Ironsides weighing in on the long-term implication of President Joe Biden's stimulus package, warning it could lead to, quote, a slower recovery in the labour market and earlier Fed asset purchase tapering. Barry joins us now for more. Barry, I have to say I read that line and thought that maybe it was wrong. Why a slower recovery in the labour market off the back of a monster fiscal package?
Oh, very similar reasons to what happened in the last business cycle when typically Congress will extend unemployment benefits from 27 weeks. Last cycle, it was to 99 weeks. They rolled that all the way until the very beginning of 2014 last cycle. And turns out the strongest year for the labor market recovery through the entire, almost 11-year expansion was 2014 when they finally ended those benefits. Jobs openings surged. Unemployment rates for less skilled workers dropped precipitously. And it was the disincentives to look for work that really did slow the labor market recovery. we saw the same thing last summer when there was the $600 expanded unemployment insurance. You had supposedly a fiscal cliff that we were going to go off in August, yet the opposite occurred. The labor market recovery didn't slow at all or stall at all. You could see it in the recent weekly jobless claims. You had a continued decline in continuing claims across all of those programs from Thanksgiving through the end of the year. Then you reinstated the programs, and we saw those claims jump right back up. So listen, the argument that you should be doing this is certainly valid with governors locking down states. But now that the lockdowns are lifting, the vaccine pipeline is clearing. We've been delivering, almost 1.5 million per day on a 7-day average. You've got to ask yourself, how long do we want to continue to add that extended or expanded unemployment insurance? And do we continue it all the way through this summer?
Yeah.
In which case, the labor market recovery just stalls in the summer.
But Barry, as you point out, sir, this is the difference between calibrating the response for when the economy is shut down and when it reopens. Is that a decision to make later on in the year?
Well, I thought that the 10 Republican senator proposal to extend it to the summer and then see where we're at made the most sense. Extending it clear through the summer at the point when we're opening up seems to me to be overkill. But, listen, Thomas Sowell said this a long time ago, right? There's no solutions. There's only policy trade-offs. So the minimum wage is clearly a policy trade-off based on CBO analysis, right? So is this expanded unemployment insurance. It's a trade-off. The trade-off is a slower recovery, but just a number of people that wouldn't be able to find a job get extra unemployment insurance.
They want to run it hot, Barry. Do you think they'll be successful?
Oh, I do for sure. I think that there's just so many conditions that are different than 2009. The level of household debt to disposable income, level of financial sector debt, the size of the liquidity injections. Larry Summers articulated this pretty well. It's just so much greater with a much lower debt burden. They're pumping a lot of money into the system. And I think that people forget about the 3 disinflationary shocks we had in the last half of the last decade. We had a 75% decline in the price of oil because of shale-related supply. Then we had the Tax Cuts and Jobs Act, which shifted the supply curve out and caused disinflation in a range of prices. We had service sector disinflation because of productivity enhancements, technology innovation adoption. And then we had the trade war, right? And that caused oil prices to fall again, commodity prices. So these were a series of shocks, none of which exist today. I look at the go forward, and to me, this looks like the beginning of the 1960s. We have a change in emphasis at the Fed. We have the beginnings of a reflationary cycle. At the beginning of the reflationary cycle, it's actually a net positive, particularly for markets like the equity market. Nominal GDP will go up, revenue growth will go up, earnings growth will be faster, but eventually, it'll start to degrade margins and impact valuations later on. So, the reflation is different than inflation, and
True.
the Fed reaction function to this is critical, as you mentioned in your last interview. But I think we have a ways to go before we worry about this.
You can see why people are uncomfortable, though, Barry. You've got an equity market just off an all-time high. You've got borrowing costs for junk credits at record lows and credit spreads at pre-pandemic tights now, just going into the pandemic back in January, February time of 2020. I just wonder from your standpoint, Barry, what's your message for the people to bring that up continuously? Is it normal to have that dash to trash at the start of the recovery? Is it normal to see valuations this extended before we even get going?
Oh, for sure. And if you're watching the earnings estimates just continue to go higher, my whole perspective on the GameStop saga was this is the same thing that happened in 2003 with internet stocks that had fallen from 100 down to 3. AMD went from 40 down to 5. They rebounded sharply early in the cycle. The same thing happened with challenged financial companies in 2009. So there's nothing unusual about this for the stage in the cycle, but there will be a point 3 months from now or so when inflation break-evens have gotten to levels that make the Rob Kaplans of the world uncomfortable, right? The Rob, not of the world, but of the FOMC specifically, and they will start to balk. And so the sequencing of events for me is critical. Inflation break-evens push above 5-year forward pushes well above 2.5%.
Yeah.
The inflation aggregates continue to be firm by mid-year or so. And then you'll have some of the regional presidents start talking about, well, maybe we ought to pull back on the asset purchase program. Real rates will move sharply at that point, like they did in January 18 or September 18, and you'll have a risk-off event, 10% equity market correction.
And Barry Knapp will be on this program with me talking about it. Barry, that's the crystal ball stuff. Look forward to catching up soon. Barry Knapp there of Ironsides. Thank you. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And later, JP Morgan's Jack Caffrey joins us at the opening bell, weighing in on the rally and soaring valuations. Your opening bell around the corner, futures -10 on the S&P. We pull back 0.25%. This is Bloomberg.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Equities a little softer. Time now for the morning calls. First up, Goldman adding Constellation Brands to its conviction buy list. The analyst seeing an attractive entry point with increasing revenue growth. JP Morgan cutting its Carnival cruise price target down to 23. The analyst lowering his estimates to capture the ongoing cruise suspensions. And finally, Argus upgrading Ford to a buy. The analyst expecting new stimulus payments to fuel an increase in consumer spending. That's three of the calls. Coming up next, valuations gone wild. Are we looking at a bubble that is about to burst? That conversation up next with JP Morgan's Jack Caffrey. This is Bloomberg.
election that was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Apparently you can't have a record high every day. There you go. 6-day winning streak coming into Tuesday. Record high after record high after record high. Then the pullback, a break of 3,900. A break below 3,900 on the S&P 500, down about 0.2% going into the cash open. On the Nasdaq, off by a single point on the Russell. On the Nasdaq, down by about 38 points, off by a third of 1%. There's your opening bell. Switch up the board into the bond market. Chairman Powell speaks tomorrow. That'll be a big focus. Yields in today, down 2 basis points, 115 on a US 10-year. In foreign exchange, it's yesterday upside down. Euro dollar, 121, briefly, coming up about 0.4%. Stronger euro, weaker dollar against all the G10 through much of this morning. Crude reversing the gains as well, down to 57.60, off by about 6 or 7 tenths of 1%. That's your cross-asset picture this Tuesday. Let's get to the market desk and get your movers. Here's Abby.
Hi there, John. Well, with stocks down ever so slightly this morning, let's take a look at where air is coming out of. And it has everything to do with that reflation trade plus the safety of big tech. Starting off with that reflation trade, if we take a look at both banks and energy, we are going to see actually Citi's not down all that much. So you have those bulls wanting to go back into there, down just 0.1% in sympathy with yields. ExxonMobil down more, though, and this also has to do with the fact that they are closing one of their refineries. Apple is well off of its lows, down just fractionally right now, trying to turn positive. Tesla, however, really cooling off from that Bitcoin-fueled rally yesterday, down about 0.8%. But again, a little bit of a moderating. As for where we have some outrageous movers, John, let's take a look at Glue Mobile, because the video game maker, it is soaring up 33% on the news that Electronic Arts is buying it for $2.1 billion. This will give Electronic Arts the maker of a Madden game, the Kardashian game. Who knew, John? But we do have that stock sharply higher. And then Tilray, the pot stock, also soaring. This on the news that they have received a pact to distribute medical cannabis products in the UK. So there are some off-the-wall movers, John.
2 fascinating stories. Abigail, what is the Kardashian game?
John, I am just not a video game player at all, so I don't know, but it's pretty amazing.
Anyone know? Do I have to rely on Kaylee Lyons for that? Is Kaylee there? Can I bring in Kaylee? Kaylee, what is the Kardashian video game? What is that?
I'm assuming it's Kim Kardashian's Little World. It's kind of like Sims, where you have little
Kardashian's
Kardashian
Little World.
That is definitely not the title, John, but it's something along those lines.
Okay, there we go. Let me get back to inflation and bubbles. Investors weighing in on bubble concerns amid rising valuations. The Fed's Robert Kaplan speaking exclusively on Bloomberg, saying he's wary of excess risk.
When you're keeping rates at zero and you've committed to keep rates at zero for an extended period, you're buying 80 billion of treasuries and 40 billion of mortgage-backed securities, we should expect that that's going to have a material impact on liquidity, financial assets. I'm very concerned and watching, excess risk-taking.
That was Robert Kaplan. Kelly, I'm still thinking about Kim Kardashian's Little World.
It's Kim Kardashian's Hollywood, actually.
Maybe
John.
that's a sign of the top
quickly for
that
you.
we're talking about this and not this market.
It probably is.
What's going on? What's going on?
Well, John, once again, I'm going to talk to you about bubbles, as I have been for quite some time now. With such abundant liquidity driven in large part by the Fed, valuations are looking quite stretched. But there are areas of this market that are looking a lot more frothy than others. The poster children for that as of late have been the Reddit darlings, the likes of GameStop and Express. While their meteoric rises have been unwound to a large extent, GameStop lost about 80% of its value from its recent peak. It's still up 185% on a year-to-date basis. And that is only just over a month. And Reddit attention is now turning to others like pot stocks, Tilray, and Afria, up 340 and 200% respectively this year. That has no major fundamental reason, John. It is just mentions on a message board. And it's not just the Reddit frenzy that we have to pay attention to, but the crypto one as well. Bitcoin and bubble talk going hand in hand these days. The digital coin was driven to an all-time high of $48,000 on news that Tesla was investing $1.5 billion into the asset. That rally has fizzled a touch this morning. The coin only trading around 46,000 right now, but still that's up 370% over the last year. And to many, the crypto craze is indicative of short-term speculative mania in the market right now. And I would just point out, John, that crypto and Bitcoin specifically and Tesla were already very closely connected. The moves, the parabolic moves higher for those two assets pretty much look alike. They have moved in tandem. The correlation actually is around 95 basis points, which is very, very close to a perfect correlation, John. So if there's a bubble in Bitcoin, we got to take a close look at that EV maker as well, John.
Kelly Lyons, thank you on all the important stuff. Kaylee, thank you very much. Prices make headlines. JP Morgan's Jack Caffrey shrugging off valuation concern, writing the following: markets are reflecting the realities, not ignoring them. As the recovery continues, the rally has broadened. Equities look expensive relative to history, but high valuations are justified in the current environment. Jack joins us now over the phone. So, Jack, let's start there. Why justified? Why are they justified?
Well, your starting point is starting with earnings, and earnings are certainly improving fairly dramatically. If you look through what we've seen through the quarterly reporting season, positive surprise, not just on earnings, but also from sales. Then when you start thinking about valuation, the function is, well, what else can I do with that dollar? And not to say that we are in still the world of there is no alternative, but that equities remain relatively more attractive given that they have income, that they have that income turning into dividends, and those dividends are growing over time. And so we think that, looking to this year, looking through most of last year, valuation was what mattered and what actually drove the return story. Moving to this year, anyone who's telling you have to buy stocks expecting higher valuations is probably wrong. But fundamentally, the trade-off is going to be one of slightly lower valuations paired with much more powerful earning streams, turning to much more powerful cash flow streams.
Jack, I talked about this with Barry Knapp of Ironsides about 15 minutes ago on this program. How unusual do you think it is that at this stage of the recovery, we're already talking about credit spreads where credit spreads are, borrowing costs where borrowing costs are, and equity markets where equity markets are at record highs?
I think it's not. I would say it's a slightly unusual mix, but then again, it's an unusual mix of how much policy support markets have received over the past year in terms of the amount of stimulus, the amount of fiscal support, the amount of Federal Reserve support. And that turned into, as your comments from Robert Kaplan turned into, a tremendous underpinning of liquidity into the market. And money that was saved and traded, money that's saved and put in the savings accounts, and money that ultimately we believe will be turned into consumption over the next several months as you can escape from thinking about the virus and allow for a more normal economic environment. In that more normal economic environment, financial streams will probably find themselves working their way into the real economy, whether it's the housing markets, whether it's consumption, people actually being able to go to the office, and then even going to on vacation. And so that amount of stimulus is not, short of wartime effects, almost unprecedented. And so market conditions, I think, are reflective of we live in very unusual times.
Jake, trying to time these unusual times is really, really difficult. And one thing that stands out whenever I talk to any member of the team over at JP Morgan is how to anchor yourself to the mega trends that will be with us through the cycle, through the next 5 years, and maybe even beyond. Jack, how are you thinking about that now?
Yeah, I think the megatrend concept allows you to take your eyes off of what the next tweet is, what the next initial data report is and actually start thinking, where does the world go? And it leverages, if you will, the quote from Wayne Gretzky. You want to look for where the puck is going, not where the puck is. And in that regard, looking to how technology is changing our life, thinking about how healthcare is evolving over time, winds up being really powerful, as well as the idea of, you think about government policy shifts, the idea of a greener and perhaps fairer economy. I think you wind up creating these issues which say, you can step away from the latest point and instead think this is where the world seems likely to go. And it's not necessarily just the U.S. story, but a global story. And I think that gives investors confidence to look to that issue. Will there be volatility? Of course. But I think ultimately volatility is what gets you the opportunity to potentially buy situations at more reasonable expectations and more reasonable valuations. And so, some volatility actually is a good thing for an investor.
Jack, great to catch up, sir. Jack Caffrey of JP Morgan, thank you. In this market right now, we declined by about 0.2% on the S&P 500. Bottom of the pile was top of the pile yesterday. Energy down by about 2% around the opening bell. Session's young. Let's get to the market desk and get some movers. Here's Abby.
Well, John, before taking a look at some of those energy movers, let's take a look at some of the other stock movers. And if you can believe it, we're actually going to bring the Kardashian family back into the story. But starting off with Twitter, it's pretty amazing, I know. Twitter is popping higher, up 1.8%. This on the news that they are considering a subscription for their TweetDeck. Ford is also up off the highs, but up 0.3%. This on an upgrade from Argus. Now, Coty down 13%. They missed both sales and earnings for the second quarter, and this is where the Kardashians come in. They, of course, Coty bought 50% of Kim Kardashian's half-sister's Kylie Jenner brands, not really helping folks want to use makeup during the shutdown, the lockdowns, and we have Coty shares off. We also have Cliff Natural Resources down on a secondary offering of about $326 million. Investors worried about dilution. And then a piece of that reflationary and reopening trade that you were just mentioning that is not working out today, a bit on pause, the energy pile. Take a look at some of the bigger drags on the S&P 500 this morning. Marathon Oil, Occidental Petroleum, Diamondback Energy. But, John, these stocks have been on fire over the last 6 days into today, so perhaps just a bit of healthy consolidation.
I'm starting to wonder whether you are on the Tom Keene payroll. 2 mentions of the Kardashians on this program. I feel like I am being trolled a little bit, and that maybe Tom has put you up to something.
I wasn't even aware of Tom's obsession of the Kardashians with you, so no.
Loves them. No. Loves them.
Oh, well,
really does.
I will have to get onto that payroll, and then maybe we'll bring them in more often.
Have a chat to him. Abby, thank you. Coming up, investors turning to risky debt. Junk bond yields at record lows. Up next, Morgan Stanley's Sri Sankaran from New York. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We
have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
We're guided by, right, our dual mandate goals of price stability and maximum employment. And, you know, once we get to a point where we've seen substantial progress on those, we see inflation hitting 2% and on a trajectory to rise above 2% for some time, right? Then that's the point at where we'll reconsider the accommodation that's in the economy. But there's good reasons to think that really it's going to take some time.
Cleveland Fed President Loretta Mester there remaining committed to accommodative policy despite rapidly rising inflation expectations. Investors relying on that support to move into riskier debt, with the US junk bond yields hitting record lows, falling below 4% for the first time in history. For more, Bloomberg's Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, that hunt for yield is ongoing and driving junk bond yields ever lower. Of course, investors looking to take on more risk in return for more income, especially with the Fed providing the backstop in this market. As you said, that has driven junk yields to a record low below 4%, hitting 3.96% last night after falling for 6 consecutive days. And of course, spreads have gotten tighter as well, down to around 327 basis points over treasuries. And what's noteworthy, John, is it is the junkiest of junk debt that is outperforming. Investors going further out onto the credit risk spectrum. For B and B rated junk debt, they've returned about 1%, a little less so on a year-to-date basis, but triple Cs have outperformed the rest of the market for 3 consecutive months, returning 2.5% so far this year, and those triple C yields have dropped to just 6.2%, which is also a record low. The demand for high-yield bonds, John, really is remarkable. The majority of new issues have been hugely oversubscribed, including in that triple C tier, which makes up a sizable portion of the supply, and the issuance just keeps coming. In January, a record $52 billion worth of sales were priced. It was the 3rd busiest month ever for junk, and already year-to-date volume is nearing $70 billion as of yesterday. Because with borrowing costs this cheap, it is bringing more and more junk-rated companies to the debt markets, and investors just can't seem to get enough, John.
Kelly, thank you. Topic of the morning for many people. Morgan Stanley's Sri Sankaran joined us to weigh in. Sri, let's just go straight there on the record low borrowing costs for junk bonds right now. Sri, what's the best way of looking at this? Through spreads relative to the benchmark to treasuries? Or do you look at absolute yields and say things are crazy, too far, too quickly?
I think a couple of ways of looking at that, right? So if you are an issuer, I think as a high yield issuer, the all-in yield does matter. So this is probably the ideal environment to lock in as much funding as possible. So to that extent, the yield drives to some extent the issuance volumes. But as an investor, I mean, if you're driven by total returns, et cetera, yes, I mean, you are looking at levels which are fairly unprecedented in terms of the level of yields. And to that extent, even, I mean, regardless of whether it's a spread or the risk-free rate that moves, price-wise, the total return dynamics start to look less attractive going forward. But yeah, I mean, from a spread standpoint, we don't think it's as stretched just yet.
Sri, I remember when these kind of things started to develop in Europe, when you started to see record low borrowing costs, when you started to see corporates borrow with a negative yield, there was a lot of pushback, but there was a policy anchor there. Do you think we have the appropriate policy anchor for what we're seeing play out in price in the United States?
Short answer, yes. In the near term, I do. I mean, our call is that policy will remain accommodative despite the reflationary pressures building. So that means that the front-end rates will remain anchored. It's not to the same extent as in Europe, where obviously for the investment grade market, you had the dynamic of negative rates anchor plus the ECB buying corporate bonds. So that was a very different dynamic. So I don't think we get to as extreme levels here. But the combination of expected improvement in growth and inflation trajectory, plus a continued accommodative stance, at least over the near term, that's what's translating into steeper yield curves and anchoring the front-end yields.
Sri, I know this is something you've given thought to, so let me go there. Just on treasury yields and those steeper curves, what do they start to compete with for foreign investors in the United States in credit? What are you focused on, just in terms of that dynamic?
So for the investment grade market, there are a couple of things which do matter, right? So higher yields, it does translate into some degree of rotation concerns out of asset managers into the traditional yield buyer or the LDI community. And the second leg of it is the international investor base. which looks for a dollar-denominated product to us. Investment-grade credit still looks attractive versus treasuries. If we just look at it on a spread-to-yield ratio, it's somewhere in the middle of the range. If you get to the 145, 150 range that our rate strategists are forecasting into year-end and spread remain at these levels or grind tighter, that's when maybe the economic starts to shift. But at the end of the day, I mean, the international community for the euro-denominated investor, 30% of the IG market is negative yielding. 80% is like less than 50 basis points of yields on a hedged basis. Dollar IG credit still looks attractive regardless of whether you look at it as an international investor on a hedged basis or as a dollar-denominated investor looking across fixed income.
The rate breakout, or the prospect of one, Sri, I know is getting a lot of attention in the early part of 2021. How are you thinking about the rate-sensitive parts of the credit market, just in terms of making the decision between, say, going through CDS and going through the bonds themselves? What would you do?
So for us, at the current market, I mean, the total return prospects for cash bonds does look a little stretched based on where the cash CDS basis is. So we'd rather take long exposure through the CDS market, derivatives not getting exposure to the rates component within the IG market. I think for the high yield, the way we're rotating or reducing the duration exposure is by recommending a rotation into floating rate leveraged loans versus the high yield bond market.
I want to finish on this one, Sri. There was an article in the Wall Street Journal in the last 24 hours, and the headline was the commercial paper market in Europe and the borrowing costs. But for me, the story was the fact that the savings rate's gone through the roof. There's a lot of money sitting in money market funds, and commercial paper issuance has declined quite rapidly. Now, Sri, we've got this situation where, at the moment, in some parts of fixed income, we seem to have an asset shortage. Sri, in high yield, some people might just call this froth, but there's been talk of people getting on the phone, calling up the companies and saying, issue some debt, please. Sri, do you see this as a temporary phenomenon in parts of the fixed income market, or something that could persist?
I think for now it can persist, given the amount of cash that is still sitting on the sidelines and the fact that central banks continue to expand balance sheet. By our estimate, G4 central banks extend their balance sheets by another $3+ trillion this year. So the dynamic of liquidity kind of translating into the hunt for yield, that will likely continue over the near term. So to that extent, the issuance dynamics that we're talking about from a corporate standpoint, terming out debt as much as possible to reduce the refinancing needs near term, that is the natural response. And that's translating into demand-supply mismatches at different parts of the curve.
Sri, would love to catch up more on this. Some really important issues over in Europe that we need to talk about. Come back soon, please. Sri Sankaran there of Morgan Stanley. Thank you very much. In your equity market, down 0.2% on the S&P 500. A small move higher on the Nasdaq, up by almost 0.1%. In and around all-time highs still across the board, stateside. Let's get you some sector price action. Here's Abby.
Hi there, John. You know, some interesting sector action here on this slightly risk-off morning, if you can call it that. I would call it more of a pause for the bulls, because we have real estate up top. Of course, as yields drop, the dividends of those companies look more attractive. So that's pretty classic. Right behind it, you have communication services being helped out by Facebook and Netflix. On the other hand, Disney and Take-Two are both lower, so a bit of a tug-of-war, but net, those big internet names are winning out. Healthcare right on the brink, and then the rest of the sectors are lower, John, so it looks a little bit more risk-off than it probably is. Energy, though, that is on the bottom of the pile, as you can see, down 1.5%, and perhaps in sympathy with oil being basically flat to down a little bit, probably more so, John, over the last 6 days. As you know, all we've been talking about is the reflation trade. So you have the bank piece of it, but you also have the energy piece of it. So over the last week or so, that energy sector on fire, up 9.2%. So investors perhaps taking some profits there, healthy consolidation behind energy. And this is what makes the sector composition over the last week, John, just right in some ways, because it's not all reflation. It's also those big tech names, such as the Netflixes, the Apples, or excuse me, not the Apples, the Alphabets, the Twitters, and then behind it, the financials. So you have some of the old school sectors, some of the new school sectors making just right. But today, all of it seems to be a bit on pause, John.
Abby, thank you. Thank you very much. I think that's one of the more interesting parts of this equity market right now. The amount of people willing to put for financials and energy in the same bucket off the back of what's happening in the United States off the back of what's happening with this cycle, starting to tilt upwards just a little bit. I do wonder, though, if the story is about high yields by financials, if the story becomes high yields, stronger dollar, whether that starts to weigh on the energy complex and the rally we've seen in commodities more broadly, and that's a conversation we've got to have on this program in the days and weeks to come. Up next on this program, the market-moving events you need to be watching. That'll be next in our trading diary. In your markets right now, 22 minutes into the session, equities lower on the S&P, firmer on the Nasdaq. Over in Europe, we had a little bit of weight to the FTSE, up by 0.1%. We take a little bit of weight off the DAX, and the equity benchmark in Frankfurt, Germany, we are down by 0.4%. From New York, this is Bloomberg.
Such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Equities pulling back from all-time highs on the S&P 500 just a little bit. The Russell, the small caps unchanged, the Nasdaq firmer by 0.2%. We are snapping a 6-day winning streak on the S&P 500 with a mild move lower. That's the story of the equity market. Time now for the trading diary. What you need to be watching through this week. St. Louis Fed President Jim Bullard speaking at noon Eastern today. Then later, President Biden, Vice President Harris meeting business leaders at the White House later this afternoon. Here's the list. Jamie Dimon of JP Morgan, Tom Donahue of the US Chamber of Commerce, Doug McMillan of Walmart, Sonia Singhal from Gap, and Marvin Ellison from Lowe's. Look out for that a little bit later. Could be interesting. Fed Chair Jay Powell speaking on Wednesday, plus tomorrow morning we get US CPI data as well. We'll cover that for you on this program. And rounding out the week with a little bit more data on Friday, the followed University of Michigan Consumer Sentiment Survey. From New York City this morning, that does it for us. We'll continue the conversation tomorrow on these markets. This is your market right now, pulling back a little bit from record highs on the S&P 500. A reversal of yesterday with stocks up, stocks down now just mildly, and a bond market that was pushing yields high yesterday and today is pushing yields just a little bit lower. Continue the conversation with me on Twitter at FerroTV. This was the countdown to the open. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I'm currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teaching.